Alrighty, good afternoon, everybody. I hope you're enjoying your days thus far and not too tired to kick off the Token 2049 week. I'm Rebecca Evans from the FalconX Institutional Sales team. Thank you all for joining us today for what I hope will be an interesting panel discussion for you. First off, I'm really excited to be joined by two fantastic co-panelists today. We have Matt, well, wrong Matt on the photo there, other Matt. And Luke joining us today. I'm going to give both our panelists a second to introduce themselves and tell us a little bit more about their backgrounds and what they do at their respective firms. Go ahead, guys.
Yeah, so Matt Donovan, head of BD at Lombard. I've been in the space since about 2016, building mainly within the data privacy realm, and then spent around 6 years at Ripple, where I helped scale the payments business, worked on all things custody, and then was head of tokenization. Joined Lombard as head of BD a few months ago, working on a number of things, including partners like Luke, and excited to share a little bit more.
Awesome. Hey everyone, Luke Xie here, co-founder and CEO of SatLayer Labs. So been in space since 2017. Within crypto, mostly on the investing side. I co-founded 2 crypto funds. Also co-founded the MIT alumni group Beaver Block, as well as the MIT Harvard Blockchain Accelerator. Pre-crypto was more on the startup and operating side. So started my career at McKinsey, and then worked at a variety of traditional startups, large and small, largest being Airbnb back in the day.
Excellent, thank you both. And then for those in the audience not familiar with your firms, I wonder if you would quickly introduce Lombard and SatLayer respectively, and maybe for a fun question as well, we were chatting about this before the panel, tell us about how your firms came up with their names. We're always curious how these companies choose their names and when they get started.
Yeah, so Lombard is a Bitcoin liquid staking protocol building on Babylon. We've got about 5.1K BTC into the protocol to date. So we're kind of floating around that $300 million TVL range. 100 million of TVL is active and deployed within DeFi. And the way you can think about Lombard is any BTC that comes through the Lombard protocol is ultimately going to be staked into Babylon. So yeah, we've got a hot start over the last, I guess, 3 weeks. We launched private beta around 3.5 to 4 weeks ago. And we are off to the races. And so what I spend most of my time on is engaging with different types of whales, funds, miners, really anyone with BTC who's just looking to get a little bit more out of it. So yeah, that's a little bit about Lombard. And as far as the name goes, I think really what we're trying to drive at here is Lombard Marketplace in London was sort of the first financial exchange that is at least recorded within history. And so that is where Luke Pearson, GP over at Polychain, spends a lot of time within London, and I think that was really what inspired him. There's the Lombard loan, there's Lombard in San Francisco, but that is sort of the story, at least that Luke has shared, is the influence is really across London and the marketplace that exists within Lombard Street there.
So for us, for SatLayer, we're the universal security layer powered by Bitcoin. So also built on top of Babylon. In kind of 3 words, what we are is eigenlayer for Bitcoin. It's our view that I think if you kind of break the kind of entire concept of restaking down to fundamentals, there's no better asset to secure everything else within crypto than Bitcoin. For kind of all the obvious reasons, right? The oldest crypto, the most secure, the largest asset, and proof of work instead of proof of stake. So for SatLayer, what we're doing is really expanding out the capabilities on top of Babylon, and specifically with a big focus on bringing full programmability to slashing. And for us, in terms of kind of where the name came from, we've actually gone through a few iterations with the name, especially for those that have kind of like knew us early on. At one point, we were thinking to call ourselves Jin Network, which Jin means gold in Chinese. And then we kind of went through some additional brainstorming and settled on SatLayer. So SatLayer, for those that aren't aware, the Sat stands for Satoshi, and then layer for obvious reasons. Decided to kind of like keep it fairly simple, and then also have a bit of a meme potential where you can misspell it to say SatSlayer. You can make a lot of layer memes. So there you go.
How about FalconX?
You know, we still do not have the full story, but I will say, I was telling these guys earlier, we are not the rocket ship company. Many people do get confused and think I work for Elon Musk. I do not work for Elon Musk. We do crypto prime brokerage services. Sadly, I'm not going to the moon anytime soon. Just my bags of Bitcoin, hopefully. So diving into it, I want to start quite simple here. And maybe a minute of audience participation. Who in the audience has Bitcoin? Raise your hand. Hope I see a decent amount of hands in the room if you have some Bitcoin. Excellent. So if I have a Bitcoin holder and I'm hodling my Bitcoin, what options exist in the market for me today? You know, a few years ago, maybe I could just hodl my Bitcoin, and that was my digital gold for the next 20 years for my kids' retirement fund. Today, it feels there's a lot more opportunities for me to do things with this Bitcoin, but will you guys paint us a picture of the landscape for somebody who's maybe new to the Bitcoin restaking ecosystem?
I think it kind of depends who you are, right? For instance, you know, you got institutions and trading firms who've been doing sort of basis trades, or if you got WBTC, there's doing some interesting looping strategies that's been going on for quite a bit. I think that sort of spread is shrinking. It's getting pretty crowded. And then you got the likes of even institutions like Zappo Bank, who's just offered out a 1% yield product. I think that's limited to around UK customers and maybe capped at around $1 million. So I think the point at really what we're driving at here in terms of Bitcoin staking is we're trying to create different types of yields that is accessible to anyone, right, in a permissionless and fully programmable way. And so I think that is the exciting piece, where what we're really trying to pioneer up here is something that can be accessed by both the largest institutions in the world along with retail. So yeah, I think everything else happening also within the WBTC ecosystem, obviously being pretty prominent within the lend borrow markets across Aave, Maker, Compound, you name it, I think is pretty prevalent as well. And I think the exciting piece, at least for LBTC, is we can also play within that arena and already are quite actively. So that would probably be my take, but I do think that it is a bit ripe for disruption, and assets like LBTC and working with great partners like SatLayer can play a pretty big role within that.
Yeah, and I think to add to, one thing that we've noticed kind of building the BTC ecosystem is that relative to, like, let's say, Ethereum ecosystem, I think Bitcoin holders actually care a lot more about risk and the risk they undertake in order to gain yield, right? And I think it's, in some ways, if, you know, for anyone that's been in crypto long enough, like, you start thinking a lot more about risk management, because, you know, as we learned from the bear market, the recent bear market, there is no free lunch, there is no free 20% yield. And so I think for SatLayer, you know, I think ultimately what we're trying to do is to provide kind of, you know, real sustainable, almost like organic yield, right? That comes from a strong ecosystem of BVSs built on top of SatLayer that use Bitcoin as security. And then we're working with, you know, great partners like Lombard to also offer stakers a whole spectrum of kind of choices from a risk management perspective, right? You can kind of keep it simple and basically deposit, for example, like the WBTC and FBTCs, right, directly into SatLayer. You could go through Lombard, right, get Lombard yield, Babylon yield, SatLayer yield, or you could go really degen and then go downstream and then put that into, you know, for example, a Pendle and actually lever up. So I think part of what I think we believe in is offering the users choice, right? The choice of your risk profile, the choice of the kind of the asset path that you want to go through.
Absolutely, so important. And I think, again, as you said, the space is so ripe for disruption, considering years ago you didn't have that much choice with what to do with your Bitcoin, and now there's a lot that you can do to put those assets to work. So diving into the next area, I'm curious, I think a lot of people in the audience like me are more familiar with, as you mentioned, Luke, EigenLayer or opportunities in the ETH restaking ecosystem. So I'm curious, from both your points of view, what makes Bitcoin as an attractive yield-bearing asset, and how does it compare to working on an ecosystem like Ethereum, for example?
Yeah, I mean, I think, so to the first point, I think especially for those that haven't followed the Bitcoin ecosystem as closely over the last year, I think there's been a huge landscape change, right? And I think it's in large part thanks to the foundation laid for all of us by, you know, the early folks, you know, the guys who worked on ordinals and inscriptions, right? That really unlocked this kind of, you know, as some people call it, Bitcoin Renaissance, Bitcoin Season 2, where you've had a lot of teams that have had, you know, years and years of experience building in EVM, building in all layer 1 ecosystems, now coming to Bitcoin and taking all those learnings to build the infrastructure and kind of like speed run the history of infrastructure in the Bitcoin ecosystem. And so I think as a result now, right, there's many different kind of Bitcoin layer 2s that are taking distinct approaches to scaling Bitcoin. Examples are like, Fractal, BitLayer, B squared, Core. There's, many such projects. And then I think it's also on the kind of the DeFi side of things, right? There's been an explosion of kind of the key DeFi Lego blocks, right, to kind of build out the composability, build out the broader ecosystem.
Yeah, and I think you're talking about the largest crypto asset in the world, period. And so if you asked people globally, if they know about crypto, they know about Bitcoin. And so it's a good place to start. And now in terms of why is now the right time, I think what Lombard is building is really a liquidity infrastructure layer to enable Bitcoin, the L1, to access all these different, both L1s on ETH mainnet and Solana side, along with even ETH-based L2s and frankly, Bitcoin L2s as well. And so I think we're building out this liquidity infrastructure, almost bridge to these different ecosystems. And on top of that, you got the likes of Babylon, which is really bringing staking to the forefront and providing, over time, some sustainable and predictable yield. So you couple that with what folks like Pendle have done in terms of creating these also infrastructure, but from a yield standpoint, this is a really nice equation where it almost is enabling Bitcoin to finally be in the driver's seat for this new wave of DeFi. And it's being pioneered by Bitcoin, and partners of ours like SatLayer are really sort of leading the charge. And so I think what I've seen so many times across the last 6 to 8 years within crypto is people are sort of building products that they think are useful, but when you actually launch them, there's not too much traction, right? And so as I mentioned, we launched about 3-4 weeks ago. We've got around $300 million of TVL within the protocol, $100 million of TVL that is in DeFi actively. So there's clearly demand, right? And the ability for us to continue to onboard capital, we can 2-3x this probably within 2 months. Now, in order for this to be, I guess, sustainable and a bit more predictable, of course, Babylon needs to come live, and you need these different proof of stake chains that actually leverage the shared security module. But I think the fact that you can also couple what the folks of like Pendle have done in terms of creating this additional infrastructure within sort of the yield generation strategies is really exciting. And again, close partners of ours, along with folks like SatLayer.
That's excellent insights. Thank you both. And you have me all excited for all the things to come within the Bitcoin ecosystem. I'm curious as well, as it's a newer system that's being built out. As your teams have been pioneering in this space, quite frankly, what are some of the technical challenges in unlocking potential yield in Bitcoin? And how have your teams been dealing with those challenges that you've been facing on the building side?
Oh, man, where to start? Lots of challenges. Because, I think that is one of the challenges of being an early ecosystem, is that everything is being built, right? It's like the old analogy of like you're flying the plane while you're building it. I think in this case, it's maybe one step further where it's like you're actually building the tools to build the plane while you're in the air and flying it. And so I think, but I think at the same time, right, that is where the opportunity lies, is being so early to an ecosystem that you are literally at the ground floor. And so I think some of the challenges that we've had is, I think one, just overall, I think education about the ecosystem to folks, right? I think this is something that's quite interesting, just, having spent the majority of like the last decade for me in the US, but more recently over the past year, spending like more than half my time in Asia. I think the Bitcoin ecosystem very much has been kind of Asia driven to date. And I think now the West is starting to kind of catch up a bit in terms of everything that's going on. But there's been a lot of education we've had to do for folks on what even Babylon is, right? What everything that's been like kind of everything that's been built out to really educate people. And even I think for us in particular, like the concept of restaking, right? I think restaking is still something that's quite new to most folks in the space that people are still wrapping their head around. And then also certainly on like the pure technical front, I think it's also So for us building on top of Babylon, we're also kind of building in kind of leveraging Cosmos and CosmWasm, and so that relative to EVM is a much smaller ecosystem with less developed tools, right? And that's where something that we're also actively kind of internally first building out tooling that we'll then actually share with the broader ecosystem to really, I think, help everyone build faster.
Yeah, there's clearly the technical piece, but I think in addition to that, I think Luke nailed it, right? It's a lot about education and building trust. And you build trust through educating partners. I think some are pretty well up to speed on how Babylon staking works and how Lombard is building a protocol that sort of has a direct relationship with Babylon. But I think it's mainly an education thing, and it's surrounding trust. And so what we're really trying to do is take, the Bitcoin L1 blockchain and provide certain programmable mechanics to it where we can actually accept BTC and create assurances that that BTC will ultimately be staked into Babylon. And we're trying to do this in as a decentralized way as possible. For instance, our wallet and key infrastructure is built by a group called Cubist. This is a group of 11, 10 PhDs from MIT, Carnegie Mellon, Stanford, et cetera. And it's as close as we can get right now to sort of programmable smart contracts within the Bitcoin ecosystem. And so we're really good partners with those folks. But when you then talk to institutions who have historical relationships with their custody providers, and they don't want to move their BTC from a custody account that they've had for years into a group that maybe they haven't even heard of called Cubist, right? That is a big leap. So when you get into the 1,000 plus Bitcoin range, that is where it is really an educational hurdle that we're having these conversations now. But in addition to that, on the Lombard side, what we're doing is being ultimately very flexible, right? We don't want to assume that everyone is going to be very comfortable with this sort of decentralized approach of leveraging this Cubist type address that is governed by what we have called a security consortium, which is sort of the top validators, top exchanges, top market makers in the space who are actually providing the governance and security around the entire protocol itself. So again, that model is up and running. We've got about 5.1K BTC that has been deployed into that protocol to date. But when you get into the additional conversations with institutions, what we're also doing is having good conversations with the likes of Asefu, Akobo, and Anchorage, you name it, to make sure that we can meet clients at all sides of the spectrum and eventually, hopefully, take them on a journey that is more towards that decentralized approach. So there are certainly technical hurdles that Luke has just alluded to, but I also think at the end of the day, it's trust. And the only way you do that is through educational materials and face-to-face conversations that get them comfortable. And putting that BTC to work is a massive part of that education piece.
Absolutely. I couldn't agree with you guys more. And I think especially a quick aside is the landscape of, we forget sometimes how indoctrinated we all are within the broader crypto ecosystem. And I think a lot of people in the room would relate to this. I remember I was chatting with a wealth management platform here in Singapore, and he was telling me about one of his old clients who's a 67-year-old Singaporean man who had bought the Bitcoin ETF. And he was like, okay, I now own crypto, but what stocks are in my Bitcoin ETF? And the guy was like, no, it's just Bitcoin. He's like, no, what basket of stocks are in this Bitcoin ETF? So sometimes we forget that people still don't know what Bitcoin is. Like, we're all so early to this ecosystem, and especially when you're unlocking those big whales, it can be a long process of handholding. So kudos to you both for the patience and the effort from you and your teams into onboarding and unlocking, as they say, that next $1 trillion. But something that Matt just alluded to that I wanted to double click onto is security. So important, and I know that both Lombard and SatLayer place a high emphasis on security and the importance of that. So can you tell us a little bit more about why you think Bitcoin staking can be a feasible solution in terms of blockchain security?
Yeah, so I think, it's our view, and I think, this may be a spicy take, but for a lot of projects in this space that are using proof of stake, it's actually some level, I think, decentralization theater to use your own token as your security model. And so the reason being is that if you kind of put two and two together, some of the trends in the space right now, one of which is everyone is looking to launch their own token and their own chain because, for better or for worse, I think for a variety of reasons in crypto, that is the path to liquidity for your project. And then second, when you look at kind of what happens in bear markets, right? So when you kind of put those two together, one, you have more chains and tokens than ever. And then second, in bear markets, the value of every token falls 90%. What that means is that in bear markets, you're going to be quite susceptible to a 33% attack in the proof of stake system. And so our view is, let's actually just take a step back, look at things holistically, and say, okay, why don't we actually kind of cast that aside and use the oldest, most secure, and biggest crypto in the space, Bitcoin, as your underlying security model. right? In this way, we uplift security for the entire space for all these different projects, as well as actually bring more usage to Bitcoin, which ultimately actually makes Bitcoin stronger and makes the entire space stronger.
That's excellent. And we love a good spicy take on a panel, so keep the ideas coming. What about from your side, Matt?
Yeah, so I had alluded a little bit to how we're trying to tackle that problem in terms of providing assurances that from a security standpoint, we are taking best practices, right? So I think the main thing to convey is that I think there's been a lot of learnings across the last 6 to 8 years within the Ethereum-based ecosystem, right? Tried and true practices that we're applying towards Lombard. I think the Bitcoin developer ecosystem is just earlier, right, in terms of being not as battle tested. So we're really taking those best practices that a lot of our core devs and CTO and just overall product team have learned over the last number of years and applying that to exactly what it is we're doing, right? So because you can't get as close to sort of security and smart contracts within exactly Bitcoin staking today, we're truly trying to take this approach of a shared security consortium, which is almost like a proof of stake protocol itself. Now, those who provide governance for this overall security consortium, as I mentioned, are top validators, top exchanges, market makers, and really blue chip players within this space that you can trust. And obviously that's not the objective. We want to get to trustless and permissionless as fast as possible. But to provide some assurances to our users who hold LBTC, these are sort of institutions within crypto who have something to lose if they don't hold the governance structure within the protocol. So we will ultimately scale this, and it will become extremely decentralized. But I think we owe it to our users who are early adopters and investors in LBTC to provide some of these guarantees where some of the programmability falls short, at least today, right? When BitVM, Opcat, and all those things come to life, we will be the first adopters of that. But for now, that's sort of how we're tackling the security question. And then, of course, with our friends and good partners over at Cubist, it's a battle-tested team. They work with a number of blue chip players in the space. Can't name too many, but they were very close to sort of the MetaMask institutional push and others as well that fit that caliber. So I think that's sort of how we're trying to approach the problem. But yeah, I think it's early days, and over time we'll see the scale in a few different ways.
Absolutely. Thank you both for the insights on that one, because again, I think everybody in crypto is very keenly aware of security challenges, things we face, and especially as you're building, as you said, building the plane, flying it, and trying to get everything up and off the ground at the same time. It's a top concern and something that I think your teams are being very thoughtful in their approaches to, which makes all the difference in the world for scalability and sustainability in the long term. Do you want to add something, Matt?
Yeah, I was going to say, I mean, there's also where at least the security question comes up, of course, as it should, but I think there are those maybe in the space who are sometimes overly flexible when they're listening to maybe LPs about security, of course, is their number one concern, but then the only way to get use and utility out of their Bitcoin is sort of maybe self-custody type model deals where ultimately BTC never even leaves their own wallets, and maybe you can sort of factor in a way to equate that into something that is your building, where you're kind of now minting an asset based on a self-custody model that really ultimately does not scale well. And so I think security, of course, is of utmost importance. If security questions cannot be answered, no one should deploy their capital to it. But there's a bad side of this equation where, at least at the protocol level, you kind of compromise what you're ultimately trying to build in the name of quick wins that you can just count TVL to the protocol. So I think that is what we're really trying to hold true and be very integrity driven as we're starting to build this blue chip protocol that is not just to be used on the retail side, but ultimately your customers, right, at FalconX. So I think that is maybe the darker side of the security model where you're kind of just trying to create flexible models to sort of count TVL on the board, and it looks good on a chart.
Absolutely. Really well said. And I think that actually dovetails nicely into one of the things that I wanted to address, which is about ecosystems and communities. I was poking around over the weekend, and I saw the SatLayer team put out a great tweet earlier in the year about, are you suffering from points fatigue? And I hope some other people in the room can relate to this, but sometimes we feel a bit inundated with crypto news, Twitter, points, all these things happening. How do you guys think about community and ecosystem engagement as you're building and working? Again, earlier you thanked and noted the importance of your early users and early adopters, which is so important to build that strong community. How do you think about your ecosystem's engagement and how you manage those early adopters?
Yeah, I think for us, and for me in particular, I try to draw learnings from not just within crypto, but also from outside of crypto, right? From Web2, from the traditional world, because I think when you kind of really step back and look at things from first principles, the concept of the points was not invented by anyone in crypto. The concept of points with like hotel and airline miles have been around for decades. Right? And so for us, as we kind of think through the details and nuances of how we incentivize our users, we look both within crypto and outside of it. And then also I think we go back to like, what are the core drivers of why we even have these points programs, right? I think points are an interesting thing within crypto because it allows teams to really adjust and test different incentive mechanisms before you ultimately generally lock it in for when you launch your token, right? As I think folks have been in space for a while can attest to, once you launch a token, and it's much harder to kind of change things. But it's also like for anyone that's kind of built and launched startups, it's also really hard to get things right on the first try, right? So I think points are a good mechanism to help teams to iterate and get there. But there's a balance you have to strike between doing the things you need to do as the project team, right, to test different things, and then also kind of giving the users what they want. I'm personally of the view that sometimes I think people will say what they want. Sometimes people will say they want, let's say A, when they actually want B, right? It's why like for anyone that's at the user interviews, you ask questions in a very specific way to really get at what they mean instead of what they say. So for us at SatLayer, what that translates to is, I think, constantly engaging with the community, right? But then also really distilling it down to like, what were they actually looking to do instead of just what they're saying, kind of like things that they said that they want, right? And being very thoughtful and trying to strike a very balanced perspective between all the different needs.
Yeah, I agree with everything Luke highlighted there. I think the only main thing that I would add in addition to that is points exist and have to exist because there's too much friction within crypto for real products to be adopted by millions of users. And so I think that's a starting point. And I think that's okay because you can use these different points and incentive schemes to sort of get off zero and then build towards something greater. Now, I think beyond the point system, you need to have some goals in mind, and you need to understand when it is you've actually achieved those. So for instance, for us, right, like we have a public program that is going active right now. These are all documented within our docs, docs.lombard.finance, check them out. And I think what we're now seeing is it's been quite effective to the point where we've been able to scale, as I mentioned, up to 5.1K BTC, $300 million of TVL within 4 weeks. And so now I feel like we're on really steady ground to now have legitimate conversations with the likes of an Aave, a Maker, a Compound. And it sort of puts you, it legitimizes you when you can leverage these point schemes and rewards programs to now actually sit in a room with these folks or within sort of the community and the dashboards and all of that to sort of be taken a bit more serious. And so ultimately, even beyond that, on the Lombard side, where we ultimately want to be is then having conversations with folks like FalconX and your customers, where LBTC can be used as collateral within a bunch of your different types of products and offerings, and it just makes it much more easy for us to have a certain amount of TVL and liquidity within DeFi to even get into that room, period. And so I think, sure, there's points fatigue, but I still think it's pretty critical as if you can use it as a tool and not as your business. And I think that's what we've done a pretty solid job of. And yeah, check out the docs.
Yeah, I think we're combined. We're going to make points great again.
No, absolutely. I mean, you guys raise great points, no pun intended, on the importance of building, how to get off the ground, build a business, and then also put yourself in a position to grow and maintain important partnerships to scale your business, also while, of course, juggling other considerations like security and user feedback, as we talked about earlier. So it's a lot on your plates right now, I can imagine. Another question as well that I had for you guys, at Lombard, you guys are striving to connect Bitcoin to DeFi. Can you tell me more about what challenges yourselves and others face while trying to bridge these two ecosystems?
So I don't know if there's been too many challenges. It's more of understanding where do we focus, right? So, for instance, if you went onto our DeFi dashboard today, you would see 15 to 20 different integrations that we've announced. SatLayer being a core one of those. So we've got great integrations that have stood up with the likes of Pendle, Gearbox, Morpho. As I mentioned, SatLayer. We've got a relationship with the folks over at EtherFi, and so I don't think there's been too much difficulty there in sort of getting those integrations executed against, and again having some decent rewards and incentive programs that just sort of point people to these systems. I think one major unlock for us has been this liquidity vault that we launched with the partners over at 7Seas who do these Vita vaults, right? This was the team sort of behind EtherFi liquid vaults as well. It has been sort of a game changer and a massive unlock for us. And so I think there's maybe around $68 to $70 million that is within this Vita vault. And it's sort of one-click deployment where you've got active managers who are sort of deploying your capital across all those different DeFi integrations that I've mentioned, and these are professionals. So that's been a huge unlock for us. So I don't know if it's massive challenge in terms of getting LBTC as a bit of a primitive across all of DeFi. I think the main thing for us is understanding we're on ETH mainnet today. Where do we go next? Right? Do we bring this to Base? Do we bring this to Arbitrum? Do we bring this to Solana? Or a number of the BTC L2s or EVM L2s? So I think that's more of a challenge, is where do we kind of focus our efforts as where we go from here. But again, a core driver of a lot of our success and activity has been through key partners like SatLayer. So yeah, I wouldn't say it's more of a challenge. It's just more of a, where do you prioritize and sort of point your weapons in certain respective areas and maybe leave a certain different challenges or avenues for later.
Absolutely. I mean, it's a good problem to have in terms of the opportunity ahead of you with all the early success, but also the opportunities are endless to a certain extent. So it's hard to prioritize because time is probably one of your most precious resources with a team getting a new product off the ground. But Luke, I'll give you a second if you want to opine on anything in terms of connecting Bitcoin and DeFi.
Yeah, I mean, I think I want to kind of double click on a point that Matt made earlier, which is, the smart contract kind of side of Bitcoin is still super nascent. The point, there doesn't actually really exist like a currently practical way to have smart contracts natively on Bitcoin, right? There's a lot of stuff in development while the Bitcoin L2 side chains, but kind of the practical reality is that there's a reason why I think like Lombard, all these Bitcoin LSTs, and us as well are deployed on EVM right now. Is because that is just, practically speaking, the best platform there is today. But I think in short order, there will be better tools. But that's certainly, I think, a challenge that everyone has had to face with is like, okay, we're all taking in kind of Bitcoin, right, on one side, but then all the smart contracts are on Ethereum for now.
Absolutely. That's a really good point. And I think both of you alluded to what my final question of today is going to be, which is, as you're looking forward to the futures of either your respective businesses or the broader Bitcoin ecosystem, what predictions or developments do you hope to see either through the end of this year and into 2025? And it can be specific milestones for your companies and your teams or across the broader Bitcoin ecosystem.
Yeah, so I think for us, we've had a pretty successful month. As I mentioned, around 300 million TVL. A lot of that is active and deployed within DeFi. I think it now puts us in a position to have those conversations with blue chip DeFi protocols like an Aave, a Maker, a Compound. A lot of these are already in motion, so I'd love to get LBT supported within those blue chip DeFi protocols. I think from then, really the step is to get supported within a handful of these different exchanges. A lot of that will probably come in the form of these different wallets and sort of sub-entities within the exchanges. That's fine. But I think we're trying to create really close relationships with exchanges, as that would be a major unlock for LBTC and Lombard as a whole. And then I think we can kind of scale up to a point where we're actually in a room with the likes of FalconX and their clients. Because I think over time, everything that happens within crypto, I think it's exciting. The market cap of BTC and crypto as a whole is real. But when you put that into respect of sort of capital markets, fixed income, and other types of asset classes, it kind of pales in comparison. But the exciting part is now if you can provide a bit more programmability to this largest asset, crypto asset in the world of Bitcoin, and maybe it's now a yield generating asset in the form of LBTC, it can now talk to all the different tokenized assets that are coming on chain with regard to real world asset adoption and push. You can create trading pairs against these things. And to me, that's where I think it gets really exciting. And I think we're much closer to that than people realize. So there's definitely an order of operations here, but I think we're off to the races on the Lombard side and have pretty lofty goals, but I think they're absolutely achievable. Now, I think in addition to that, the exciting piece is the fact that we're also early as a business and as a company. So I think the direction that we take from here is also quite endless. You think about what EtherFi has evolved to become. It's almost some form of a neobank. I don't know if they had that original vision from the onset, but having TVL, having a liquid asset sort of puts you in the driver's seat to make really interesting decisions from here on out.
Absolutely. And Luke, what about you? What's coming up for the rest of the year?
Yeah, lots on our end as well. So I think we are actually quite close to launching our DevNet, which will actually have open to a few kind of key BVS development partners. And then after that, we're about 1 month away after DevNet launch to testnet, and then also mainnet somewhere around, I would say, end of the year, beginning of next year. So I think that all is quite exciting for us. In particular, I'm quite excited about one of the kind of BVS areas we've been focused on, which is a bridge BVS. Just because I think, given the kind of nascency of the Bitcoin ecosystem, there are no amazing bridge solutions to date, but it's something that's much needed both within the ecosystem and also from, kind of outside of the Bitcoin ecosystem into the Bitcoin ecosystem. So that's kind of a big area of focus for us that we're working with a lot of, in talks with a lot of amazing teams and then working with them on developing. And that's going to be a big focus of ours moving forward. And then I think just to add in terms of, maybe a quick prediction for the overall BTC Fi is that I think within 6 months, I think overall kind of TVL, for lack of a better metric, will be 1 billion plus.
I love it. You want to throw a number out there too?
Probably won't throw a number, but I just want to say maybe there are a lot of folks who are building within this space who don't necessarily have a legal fiduciary responsibility, but there is still a massive responsibility to do things the right way. And I say that in the context of I feel like we only have 1 or 2 more shots at this thing within crypto, because if things go sideways in a pretty radical way, it doesn't look good. And so I think anyone building within this space, again, while there's maybe not an exact legal fiduciary responsibility, we have to hold each other accountable and make sure that everyone is doing and operating in the right way. So that is not a prediction on the TVL or market cap, addressable, whatever, but it's more of just a call to action. And that's, again, why we're working with partners like SatLayer and everyone else within the Lombard ecosystem.
It's a really important reminder that we're all fighting the same fight to bring crypto into the mainstream adoption. And it's important that we hold ourselves and each other accountable in that effort. But with that being said, I want to thank you both so much for your time today, sharing all of your insights. I really enjoyed the conversation. I hope you guys all enjoyed it as well and maybe learned something new along the way. If anybody wants to follow up with you guys or learn a bit more, what's the best way to learn about your companies? I know you dropped some handles and links in there earlier. Go to the websites. What's the best way to learn more?
Yeah, we've got a pretty vibrant Twitter that is pioneered by our CMO, Charlotte Dodds. So she is a legend. She keeps that X page up to date by the hour. So definitely check us out on X. We've got a pretty active Telegram chat, Discord, LinkedIn, really you name it, anywhere you're online, we are. So please feel free to reach out, ask questions, and I would encourage everyone to check out our docs too. A lot of good information in there, docs.lombard.finance.
Awesome. And for us, I think Twitter and Discord are the primary ones. So Twitter, SatLayer, and then discord.gg also /SatLayer. So whichever one you prefer, we're always there.
Excellent. Thank you both, and thanks everybody for the time today.
Thank you, guys.
Thank you.